let's get into our 2025 projections for the total cryptocurrency market cap and walk through these possible scenarios. Alrighty, what is going on, everybody? Welcome back to another CYPRX fundamental video breakdown. In today's video, we're going to be doing a intraday analysis explaining to you guys why we're seeing a risk-off market sentiment on the day the total cryptocurrency market cap is down over $100 billion. We're going to be diving in and discussing what is happening, reading one of our intraday fundamental reports from within our private CYPRX community. So make sure that you stick around and stay tuned for that. And then I'm also going to be giving you guys my end of year heading into 2025 projection for the total cryptocurrency market cap, walking through some different scenarios and some expectations that could possibly play out, whether we see an increased risk appetite in a market recovery or whether the market sentiment continues to dampen and this market pullback continues further. With that being said, if you guys enjoy these deep fundamental breakdowns, do us a favor, smash that thumbs up button and subscribe. Before we get started, I do just need to give a shout out, you guys and gals. This year was so amazing, and we would not have been able to do any of the work that we do here at CYPRX without the love and the support that you guys show on our public social media platforms, including our new CYPRX official research labs Twitter X profile, which just surpassed 1,000 followers. So really do appreciate the love and the support. If you guys do not follow the CYPRX research team on X and you have an X profile, go over to X and type in the handle at CYPRX Research and give them a follow. They are always dropping non-biased, non-opinionated, deep Web3 related research in the form of documents from the largest organizations and institutions on the face of this planet, constantly just dropping gems after gems after gems. It's just a really good, reliable source of a constant feed of good information in this space. So make sure that you go give them a follow. And then obviously, of course, I got to give a shout out to you all on YouTube. We surpassed 30,000 subscribers this year, which is so phenomenal. 50,000 subscribers is our next target. So if you guys are not subscribed to the platform on YouTube, make sure that you do so now. With that being said, let's jump into today's fundamental breakdown. So first, the reason why we cover these fundamentals intraday, we do so publicly slightly, right? We don't cover all the fundamentals that we give to our private community members publicly, but we do drop you guys gems. And back on December 17th, before the market had corrected, I specifically let you guys know, and this is why it's so important, that you understand the market sentiment and understand the direction of the order flow for that given day, week/month. So that way you can participate on the correct side of the market. Whether it is your dollar cost averager or an intraday trader, you should always know when it's a good time to be a market participant and when it's a good time to stay sidelines, sitting on your hands, being patient and not exposing yourself to the market volatility, right? So I said to you guys on the 17th, just looking back, doing a quick recap. So that way we understand why we're in a market pullback and what has happened. The rest of the week will set the tone for the remainder of 2024, give or take. Remember, this is back from the previous week. Heading into 2025, don't be blinded by greed. This was when the market was operating at about $3.7 trillion, which I'll show you guys in just one second. I said, know when the sentiment shifts by knowing what to look for. I gave you guys some possible scenarios that could create a risk-off market sentiment. And I said a pause on rate cuts from the Federal Reserve, hawkish Fed commentary, any rising inflation on the global spectrum, Bank of Japan rate hike fears or any hawkish commentary from the Bank of Japan, so on and so forth, or geopolitical escalations. You guys can see right here, I said geopolitical escalations and tensions in the Middle East, Russia or Ukraine, Trump tariffs leading to increases in inflationary pressures on the United States. These are a few risks that remain, just to name a few. Okay, again, keep in mind, I like dates. Dates are important to me because, again, it puts our money where our mouth is at and shows you guys that we talk about this stuff well in advance. And that's what you want to see when you're following individuals on the internet, that they actually know what they're talking about. This was back from December 17th, 2024. This is going to play an important role as we go over today's intraday analysis. So make sure that you stick around for that. Okay. Moving forward, we also hosted a live call for you guys where we publicly called out this most recent pullback. Take a second here and just listen. What I think happens tomorrow is that they do deliver a rate cut, which usually tends to be bullish for risk assets. But then I think Jerome Powell is going to come out and dial back the pace of rate cut expectations in 2025. So initially on the rate cut news, The market will most likely spike up to clear out some over leveraged sellers that jump into the market early today. Everybody will be optimistic. Retail traders will get trapped in buy positions. And then Jerome Powell will come out with hawkish comments, and the market will correct the bullish rally that it has at the beginning of New York session. Something like this. Nothing too drastic. This is what I think price action will look like tomorrow. A nice spike up into highs and then a slight correction. Kids have already priced that in, right? And so both of these posts that I'm showing you guys, this one here via the text where I talked about hawkish Fed commentary, geopolitical escalations and tensions in Russia, Ukraine, the Middle East, Trump tariffs, all of that stuff, were both back from the 17th of December. You guys have this tool, this feature on TradingView where you can actually take people's posts on X and you can stick them on the TradingView charts, and it'll show you in terms of time where these posts were put out. And you can see actively that we put this post out to you guys on December 17th when the market was trading at a high, warning for you all to be cautious moving forward as we head into 2025, that we could see a market correction. So this is, again, I'm not tooting my own horn here. I'm trying to show you guys that we are properly trying to educate people on market sentiment, direction, and again, just showing you guys how I've built a 7-figure crypto portfolio by understanding when's a good time to DCA in, when's a good time to be a market participant, and when's a good time to be sidelined, sitting on my hands and remaining patient. There is a strategy to this game. And it's not just about dollar cost averaging whenever you feel it's necessary. There's actually a time, in my personal opinion, when it's time to implement capital and when it's time not to. And I've explained that strategy in our private community. So if, again, you guys want access to that, you guys are more than welcome to head over to CYPRXtrading.com and tap in with us. While we're on that note, before we head into today's fundamental report, talk about today's sentiment, why the market's down, go over some fundamental drivers that are weighing on market sentiment, and then get into our 2025 projection, risk on, risk off scenarios. If you guys want access to these detailed reports, you guys can see, I literally type out hundreds of reports per month. Sometimes the private members get 2 per day, but at a minimum, when fundamentals change, they get 1 typed out handwritten fundamental report from myself, going over all of these fundamentals and compacting them into 1 detailed fundamental report for the day that our readers can digest in our private community. If you guys want access to all of these private reports, you guys can head over to CYPRXtrading.com, join our private Discord, and you guys will have direct access to these reports so you can stay in the loop with fundamental breakdowns and the market sentiment every single day and actually know what's going on in the market, why we're seeing red across the board like we are today. Most market participants have no idea why their portfolio is down on the day. So if you guys want to learn a little bit more about the markets and actually understand what's going on, we'd love to have you on the team here at CYPRX. So with that being said, let's jump in. Okay, this is just going to take a few minutes to read through. And then at the end, we will get to our 2025 forward outlook in our projection via the total cryptocurrency market cap and walk through these 2 scenarios. So make sure that you stick around for the entirety of this report. Starting from the top, we start by talking about the current market sentiment. So as of New York session today, the total cryptocurrency market is experiencing a sharp downturn, shedding over $100 billion on the day. As of time of recording, let's just take a look at the total cryptocurrency market real fast so you guys can see. We're down about $125 billion today. Okay, so I'd say that that's a pretty significant decrease. For me, my personal strategy is I only dollar cost average into the markets when the total cryptocurrency market cap is down over $100 billion. So for me today, during Asia's session, when I go and I look to plug capital into the markets, if the market is still down over $100 billion, I will go in and I will look for some opportunities. And this is allowed for me in my personal portfolio to keep my dollar cost average buying levels relatively low. Okay. Anyways, that's a whole nother video. But this continues the trend of choppy price action above the $3 trillion mark with little signs of recovery from last week's sell-off after the surprise of hawkish comments from Jerome Powell, dampening rate cut expectations and optimism. And as you guys can see, this report here that I screenshotted and added into our fundamental report is from December 18th. And it says, Fed cuts rates, stocks and crypto slide on Powell's hawkish tone. Why is it important that I mentioned that this report is from the 18th? Because again, it shows you guys that ahead of the curve on the 17th, a day in advance, as you guys can see via the timestamp, we were warning people that hawkish comments from Jerome Powell would most likely weigh on risk sentiment. And that is important for you guys to understand these dynamics. Okay. Because everybody that was extremely hopeful and optimistic and only paying attention and being blindsided by greed on the 17th is most likely down in positions if they were dollar cost averaging in on the 17th. Whereas now, based off of our strategy, only buying into the market when the market is down over $100 billion, we now seek opportunities and are not down in our portfolio. Okay. Instead, we can look for some discounted buying opportunities. Again, it's not financial advice, it's just a strategy. Okay. The market remains uncertain as it awaits key high-tier economic data expected in early January, which could provide much-needed direction. Until then, the environment stays precarious, with traders adopting a cautious stance. The U.S. politics and potential trade wars and economic implications. So this is where we get into some of the factors weighing on risk sentiment intraday, i.e. today. The potential return of Donald Trump to the presidency introduces significant economic uncertainty. His proposed U.S. import tariffs could spark a trade war, resulting in heightened inflation and global economic slowdown, or both. Coupled with these risks, the historically low unemployment rate may face upward pressure. Recent unemployment claimed data reflects nuanced approaches and changes in the labor market. Here you guys can see some reports via the fundamental retail side of things, mentioning and talking about these Trump tariffs and policies. Keep in mind that in November, when President Trump won the election, we had a Trump rally, and everybody thought that Trump coming into office was going to be extremely optimistic for crypto, which I'm not knocking. It is via the regulatory side of things, but us possibly seeing an increase in inflation, we know would have to shift the sentiment from major central banks. And we know major central banks and policy positioning has been one of the key drivers fueling risk asset optimism as global central banks have been in a rate cut environment over the past consecutive couple of months. Here you can even see in this report, it mentions if Donald Trump's presidency enacts U.S. import tariffs that spark a trade war, that could mean a fresh dose of inflation, a global slowdown, or both. Okay. Understand that that would weigh on risk sentiment. We'll get to that in just 1 second. Initial claims today. So we did have the unemployment data decreased by 1,000 to 219,000, suggesting slight resilience in the U.S. labor market. However, the 4-week moving average increased marginally by 1,000 to 226,500, indicating possible cooling. Insured unemployment rate also rose to 1.3%, the highest since November 2021. Again, if you don't understand any of these metrics that I'm reading, and this is the first time that you're hearing this stuff, and you want access to start to learn how to digest this information instead of sifting through the internet and doing the research yourself, hundreds of fundamental reports are given to our private community members on a monthly basis to digest and understand all of this information. Okay. So I wrote here, this mixed data, again, the unemployment figures that we got today, paints a picture of the labor market potentially losing steam. If tariffs are enacted, the combined effects of rising costs, slow trade, and job losses could weigh heavily on consumer sentiment and spending. So, if the scenario above described does unfold with the labor market losing steam and tariffs imposed by Trump increasing costs, this would slow trade and increase job losses, and the risk sentiment would likely deteriorate further, favoring a risk off market environment. And I fully break down why that is for the private members in this report. So overall, the sentiment would hinge on how severe the job losses and trade disruptions are perceived to be as we head into 2025, but the dominant trend would be a move towards safer, less volatile assets if any of these factors started to weigh on risk sentiment further. Our next major piece of labor market data isn't until January 10th with the NFP and the unemployment rates from the United States. Moving on to continue this report, we also have geopolitical tensions and rising escalations, not only in Russia and Ukraine, but also in the Middle East. Most recently, this is probably the biggest breaking headline weighing on risk sentiment. The geopolitical landscape continued to darken with escalations in both Ukraine and the Middle East on Christmas Day. Russia launched a massive assault on Ukraine's energy infrastructure, causing a widespread blackout, leaving 500,000 people in the Kharkiv, hopefully I'm pronouncing that correctly, probably not, region without heat during freezing temperatures. Here you can see that breaking headline from Reuters on December 25th, which is exactly, if you take a look at the total cryptocurrency market cap, when this most recent decline or outflow of risk assets started. Okay. To continue further, the attack wounded several civilians and prompted condemnation from the US President Joe Biden, who committed to accelerating military aid to Ukraine. Key takeaways: such geopolitical instability fuels demand for safe haven assets like the US dollar, gold, and bonds. Risk sentiment continues to remain dampened as markets react to these escalating tensions. So, these are key and primary factors as to why the total cryptocurrency market cap today has shed over $100 billion. And it is very important for you guys to understand these metrics intraday because you can take advantage of opportunities when these things unfold. Also, we are seeing uncertainty surrounding the European front. Germany and France face political log jams, which have further complicated the EU's response to global challenges. These uncertainties amplify the fragile global economic outlook. So, here you can see a breaking headline from the 25th. This is Christmas yesterday. EU faces challenges amid German and French instability. Remember, the market does not like uncertainty. So, not only is there uncertainty surrounding Jerome Powell's hawkish rhetoric as we head into 2025 so far, right? That's what we've covered, weighing on risk sentiment. We've also seen uncertainty surrounding the possibility of tariffs imposed by Donald Trump, leading to escalating inflation. Now we're also seeing rising conflicts in both the Middle East and Russia, Ukraine, as we head into 2025 that we know weigh on risk sentiment. On top of that, we are also seeing challenges amongst the political forefront in the EU surrounding Germany and France, which are also causing major headwinds and uncertainty as we head into 2025. So with that being said, those are the key major factors as of time of recording this video breakdown weighing on market sentiment. Now let's look more so forward into 2025, some things to be paying attention to. Our primary focus here at CYPRX has been the positioning from one of the major central banks, the Bank of Japan. So here we write and talk about that. Let's break this down because this is something that not a lot of influencers on the internet are paying attention to or even talking about, or even know that this could possibly unfold due to their lack of understanding and education on this topic that could extremely weigh on risk sentiment. And that would be the unwinding of the yen carry trade if the Bank of Japan were to hike rates in early 2025. So let's digest and talk about this. The Bank of Japan remains a focal point for market watchers. Governor Koiza Ueda recent statements reflect caution, keeping the possibility of a rate hike in January open but uncertain. Market expectations for a rate hike have shifted, with traders now assigning a higher probability to a March move. I highlighted that in bold because we could see a rate hike from the Bank of Japan as soon as either January or March, which will also weigh on market sentiment and most likely lead to the unwinding of the yen carry trade, which would dampen risk assets, particularly like crypto. Traders, this is a screenshot from one of the fundamental reports, and it says traders see a 46% chance of a rate hike in January as of Wednesday, with about an 82% chance of a move by March, according to the latest overnight index swaps. Then here, a portfolio manager from Berman mentioned that he still thinks the odds of a rate hike from the Bank of Japan still hold weight in January, which would also significantly dampen risk sentiment. And we've heard from the Bank of International Settlements that the last time that the Bank of Japan hiked rates, this was at the end of July, rolling into the first week of August. The cryptocurrency market sector was one of the most heavily impacted sectors in global risk assets after the Bank of Japan hiked rates in 2024. So this is extremely important to be mindful of and be paying attention to as we head into next year. This was a really good read that we included in our article where I gathered some of this information. Now moving forward, some of the key insights that we need to be paying attention to moving forward is that Governor Ueda from the Bank of Japan reiterated the need to monitor domestic and global risks before adjusting rates. On the economic context, Japan's inflation has exceeded the Bank of Japan's 2% target for over 2 years, bolstering arguments for tightening monetary policy further as we head into 2025. Currency implications. The yen has weakened slightly following Ueda's remarks yesterday, but any further slide could prompt the government intervention to stabilize the currency, which could also create shockwaves in global risk assets if the Japanese finance ministers were to intervene with the currency and inject liquidity. So moving forward, we do have some critical data releases tonight to be paying attention to, including the Tokyo CPI figures, where market participants are keenly watching for signals that could influence the yen strength and rate hike probabilities. Now, the converge of geopolitical, economic, and monetary policy uncertainties has intensified demand for safe haven assets over the last week. Jerome Powell's hawkish tone last week, coupled with Trump era tariff fears, has further weighed on risk sentiment, and investors are increasingly seeking refuge currently, as of time of recording this video breakdown, in gold, US Treasuries, and the US dollar. So, with that being said, as we roll into the Asia session, as this video is released to you guys, what we need to be paying attention to is Tokyo CPI data. That's what we have left for the remainder of this week. The Bank of Japan summary of opinions, and any geopolitical developments, escalations, and tensions in the Middle East, Russia, Ukraine, as we head into the weekend. So, right now, the cryptocurrency market, along with traditional asset classes, are finding themselves at a critical juncture. With no immediate catalyst for a possible and further recovery, the market continues to grapple with geopolitical tensions, central bank uncertainty, and mixed economic data. With that being said, traders and investors for the road ahead require vigilance, flexibility, and a clear focus on both fundamentals and sentiment drivers. Right? I know that that was a mouthful. And if you don't understand fundamentals, you might be like, what the is this dude talking about? It's very simplistic to understand. And like I mentioned, in the private CYPRX community in our Discord, we have weekly Zoom calls where we break this stuff down for our private community members, including giving out daily hand-typed fundamental reports. If you guys want access to all that information, again, head over to cyprxtrading.com. Let's get into our 2025 projections for the total cryptocurrency market cap and walk through these possible scenarios. So this would be best case scenario, bullish conditions met, and a market recovery from the most recent market pullback and downturn, as long as we hold above $2.9 trillion or the mid-November higher lows. This is where we would see higher prices, and this would only be met if bullish conditions arise. Things like lower inflation readings heading into 2025 globally from major jurisdictions, prompting central banks to continue easing monetary policy in 2025. We would also need to see easing concerns over Trump tariffs. We would need to see a pushback on Bank of Japan rate hike possibilities, easing fear, uncertainty, and doubt of Bank of Japan rate hike, leading to possible unwindings of the yen carry trade. We would also need to see dovish leaning Fed commentary, bringing back rate cut hopes, and easing tensions or ceasefire talks in the Middle East, Russia, and Ukraine. Along with that, we would also like to see new crypto ETF launches or inflows from major financial institutions that actually move these markets. These are some possible scenarios that could unfold that would obviously, of course, boost risk asset optimism and turn the market sentiment that we're currently seeing right now from risk off to risk on, and most likely lead to a bullish recovery or higher prices across the crypto ecosystem. Opposite side of the spectrum, this would be the worst case scenario and a deeper market retracement, declining further from what we are currently seeing today. That would be if we see, heading into 2025, higher inflation readings globally from major jurisdictions, prompting central banks to maintain or resume tightening policies in 2025, i.e., pushing back on further rate cuts. Renewed concerns over Trump tariffs, potentially escalating trade tensions and creating a further risk-off market environment, or any uncertainty surrounding possible escalated or elevated inflationary readings. Acceleration of Bank of Japan rate hikes, any data from the Japanese front that leads to a stronger yen, leading to potential risk aversion in global markets or more demand for the Japanese yen, i.e., safe haven. Any hawkish Fed commentary signaling higher for longer interest rate policy stances, squashing hopes for rate cuts, and tightening liquidity conditions further. Any delays or cancellations of any new crypto ETF launches or significant outflows from existing ETFs, reducing investor enthusiasm. So any of these scenarios that unfold as we head into 2025 could dampen the market sentiment further. And under those conditions, I am expecting a further drop down into the $2.9 trillion range. If we did end up breaking $2.9 trillion and we did see market conditions worsen, I'm expecting for us to see a further decline back down into the November 2024 lows around $2.2 to $2.3 trillion, i.e., a deeper market correction than what we're already seeing today. Okay. So now you guys have those scenarios. You guys have a fundamental play by play. With that being said, I hope that you guys enjoyed this fundamental breakdown, understanding what conditions are weighing on market sentiment right now. Now that you all know that, moving forward, understand what could change market sentiment and flip things back risk on. As always, many blessings to you guys. Make sure that you guys are following the right platforms and the right channels as we head into 2025 to gather the right information and direction and market sentiment. With that being said, be cognizant, be aware out there. As always, stay blessed, and I'll see you guys in the next video breakdown.